think everybody has had an opportunity to take a little break. So got another fast one for you guys. And again, this is Karen Roberson. I think everybody has been in the other sessions. So we are going to talk about reconciling in record time. We're going to talk about your aging reports versus your trial balance report and reconciling back to the GL. We're going to talk about customer deposits, bank reconciliations, inventory trial balances and balancing that to the GL, and also purchases clearing. So again, like in the others, there's a lot of information here, and everything I've got is going to be PowerPoint. Yeah, I can't imagine that we're going to have extra time at the end for questions. But if you do have questions, please put them in the box. And if I don't have time at the end, I will get back with you, I promise. And then I'll show my contact information so that you'll be able to email me if you need to. And let's see, you'll also get the copy of the link to the recording rather. And then our housekeeping, just in case we have anybody new, we've got a Q&A box. So if you've got questions, you can put it in that box. If you're having any kind of technical problems, put that into the chat. And at the end, our wonderful Falana will do the spin to win, and we'll give away another $25 Amazon gift card. So I am going to turn off my videos so that you don't see the paper waving in front of my face. So I have to apologize in advance. They probably got the most boring presenter to present one of these most boring sessions. Hopefully it will be well worth it though. This is one of the necessary evils for people in our business. You know, we have to reconcile. So we're going to start off, we're talking about the aging reports versus trial balance report. And so in accounts payable and accounts receivable, they both have an aged invoice report and they both have a trial balance report. So the aged invoice report, it is based off of either the invoice date or your due date, depending on your setup options. And so let me continue. So then the trial balance report, that uses the transaction date, and the transaction date is what was used to post to the general ledger. So that's why you use the trial balance report to balance to your general ledger. So often your aged invoices report will also balance to the general ledger, but you do have situations, you know, like today, it's the 13th of May. So, you know, let's say today you get an invoice in the mail that was dated April the 30th, and you've already closed, you've printed your financial reports, you're done with April, and you don't want to post that expense back to April. You know, this most often happens with vendor invoices. You know, with the customer invoices, you have more control, so it's easier. But with your vendors, if you enter that and you put in the invoice date was April 30th, and then when you update it, you don't want it to update to April because you've already closed it, so you put in a May date. When you run your aged invoice report, if you run that as of April 30th, that invoice will show on the April report. If you run the trial balance report from accounts payable as of April 30th, it will not. That's because you posted it to the general ledger in May. So, you know, it's not unusual for us to get calls from somebody and they're saying, hey, my aged invoice report's not matching to my general ledger. So we have them check, and it's like, okay, we'll run the trial balance, and you know, it's like, oh, that one matches. So you know, then we can find that there's that, you know, typically it's just one invoice, or maybe it was a batch of things. So I think you'll understand that. And there we go. It wasn't advancing. But what do you do when your trial balance report does not match to the general ledger account? Well, we've got a list of some things you can do. Very first thing we'll always have you do is go to the general ledger, and on the main menu in there, there's a daily transaction register. We will have you run that because if somebody updated one of their invoice registers and they updated, to, your vendors or your customers, but maybe they did not run the general ledger part of that update. So that sits out there and waits. And I'll put another little hint in here. Anytime you're going to run financial statements or any kind of general ledger report, get in the habit of going ahead and running that daily transaction register from the main menu. It can save you some headaches down the road. All right, so if you're still not in balance after that, then the next thing to do is use your general ledger detail report to look for any journal entries that somebody may have made to that account. And you can also use that to verify that postings did not come from another module. And in a second, I'm going to show you a screenshot of exactly what that means. And something else is you should verify in your module setups that no accounts have been set to post directly to that AR or AP account. So for example, in the past, I've had some clients that, they didn't do AP discounts. So for whatever reason, in their division maintenance setup, they set the discount field to their AP account. Well, whether it was on purpose or just a fluke, years down the road, somebody did take a discount on an AP invoice. And because it posted that discount to the AP account, it caused the trial balance report to not match the AP. So, we were able to just do a journal entry and get that fixed. But that's why we go through and we look at the module setups, make sure something's not been set. And then the other thing is to compare the general ledger detail report to all the postings to make sure nothing was lost. I had somebody last year, I don't remember now why, but they had turned off the posting to general ledger, and there was a batch that got missed. And then you also use that to make sure that no one manually entered your AP or AR account on an invoice entry or some other type of entry. All right, so this is where I was telling you. On the general ledger detail report, because your AP and your AR account and then some of your other accounts, they should never ever have journal entries. They need to come from the source module, or you're not going to balance. So notice here we've got this field, the source type. When you click on that drop-down box, you can choose GL journals, and then you also have module registers. So what I do, like if it's the accounts payable 2000 account, I would choose GL journal here for my source type, and then I'd come down here to account number 2000, and then I would make sure I've got whatever date range I'm looking for. And if everything's been done properly, you will not have any postings to those accounts. If you do, then that's your starting point. 9 times out of 10, that's going to be the amount you are out of balance. All right, so hopefully that will be helpful to you. And moving right along, we're going to talk about customer deposits. So if you've got sales orders and you accept deposits for prepayments from your customers, then you're going to set up a customer deposit account, and it's going to be set in one of two places. In your payment type maintenance, you've got an asset account, and that's what you reference to your customer deposit account, the GL. If that is blank, then in your sales order options, we have a customer deposit account here. So it first looks for your payment type, and then it looks for your, if nothing is there, then it goes to your sales order options. And let's see. So when it's time to reconcile, what you will do is, in what I typically do is either a custom lookup in the sales order menu, or sales order entry screen rather. And you can see I've got a little screenshot of that here. So I just created a custom lookup. For those of you who were in the earlier session, you saw how I created a custom lookup. And then I just added, my payment type and my deposit amount. And then I put a filter on there so that it only shows if I've entered a deposit amount. If I've got a few, then it's very easy. If I've got a lot of activity, then I do that export to Excel that Lisa told us about. And then, if I've got a lot of activity and it's not balanced, then I take my GL detail report and I export that to Excel, and then I do my comparison. So one of the things to remember is when you put a deposit on a sales order, that does not post to the general ledger until you update the invoice. So when you get a payment from a customer, you have to go into cash receipts and you have to tell it it's a GL posting to your customer deposit account. Or if you don't do cash receipts, then you could use a general ledger transaction. That would work also. Make sure I didn't have any other little notes on here. Nope. All right. So now we are ready to move on to bank reconciliation. So on your bank reconciliation report, you take the calculated book balance and you compare that to the balance in your general ledger. And before we go in and talk about what to do when they don't balance, I just want to give a couple hints, because probably on average once a month we get somebody that calls with these kinds of questions. So you've got your, when you run your bank reconciliation report, when you get done, if these three criteria over here are met, then when you're done with it, it will ask you if you want to go ahead and get rid of those cleared transactions. But in order for it to ask you that, first thing is the out of balance amount has to be 0. You have to select one bank code at a time. So see here, I've got bank code equal to A. If I've got 3 different bank codes, I have to run this 3 times. And then this one is not absolutely required, but I find that it can cause headaches if you don't. So I come out here to my document date and I just go into that second field over here and I put whatever my statement date is. All right, so moving along, what do we do when they don't match? So some of the things we just talked about. So use your general ledger detail report to look for journal entries, because if you're posting to bank rec, you should not have journal entries. You have to post from something that's integrated to the general or to the bank rec, and make sure that somebody didn't put in that account somewhere where they shouldn't have. So, shouldn't use cash account on invoice data entry. And I want to point out that general journal entries do not post to your bank reconciliation. And then if you use transaction journal entries, they will only post to the bank reconciliation if you have set up the format to do so. So if you use transaction journal entries and you're not sure what I'm referring to, feel free to put a question out there and I'll get with you about that. Okay, so our most common culprit when we find that something isn't matching up is the GL posting date is not the same date as the document date. Usually that's just a miskey where somebody has put the wrong date and it's something into the future. Okay, and then verify that all entries appear in both of the GL postings and your bank reconciliation detail. And, you know, sometimes it's a matter of you've just got to print it out and tick it off one against the other. In a last resort, sometimes things do get out of kilter within the data files. So everything you've marked as not or as cleared, we have to go through and unclear it, and then get our assistance. There are some utilities that Sage has, so that that typically will bring things back in balance. All right, and we're going to continue moving along. So talking about inventory balancing. For those of you who have inventory, you know that can be a big headache, and it can get really complicated. You know, you've got, some of you will have raw material inventory accounts and a separate finished goods inventory account. And some of you may even have multiple finished goods accounts, for example, or multiple raw materials accounts. So getting these reports and getting everything balanced can be a chore. So, you know, to keep things moving along, and for the sake of time, I'm going to keep this somewhat simple, but keep in mind that you may need to run, you know, either the trial balance report or the valuation report multiple times. So the inventory trial balance report is what has been created to balance to the general ledger. Because, you know, it's using the same transaction dates. The inventory valuation report that some people use, and if you're really good about the dates, you know, that may work also. But it is a perpetual value. That means it is, when you run that, that's the total value of your inventory at this point in time based on what has been posted. So if that is off, then I always look for future year postings. And, you know, if I'm having trouble with getting the inventory trial balance to match up, then I take the inventory valuation report and use that, you know, the furthest point out of however many postings you've got into the future, whatever that value is, that is what should match to the valuation report. And just a little hint that the negative tier adjustment report can make the reconciliation a little easier. So if you've got any kind of valuation method on your inventory that is not average cost or standard cost, then the negative tier adjustment should be run periodically. And Sage has added the inventory valuation report by period. So you can utilize that, but I have found it's not 100% reliable. If you are not good about keeping your period end closings up to date, then that may not be totally accurate. All right, so let's talk a little bit about this trial balance report. You've got some different options here. So on the sort report by, I was talking earlier about product lines. So per product line, you typically define whether it's a finished good or raw material, and then product line also defines your general ledger account. And we're going to see some screenshots of that here shortly. And then we have a print trial balance as of date. Again, if you you need to stay on top of keeping your period ends on time. And then if you do have a standard cost valuation, you need to make sure that you choose the right standard cost. And then your product types, you know, so if you've got separate accounts for your finished goods and raw materials, you would run this once for finished goods, another time for raw materials. All right, so what do we do when they don't balance? Same thing we said before, general ledger, main menus, run that daily transaction register. Make sure that there's not anything that didn't get updated. Use that GL detail report to make sure that journal entries weren't made to your inventory account. And then you can also use that general ledger detail report to make sure that postings didn't come from a module where they shouldn't. So accounts payable and accounts receivable should never, ever, ever post to the inventory account. And then same thing we talked about earlier, verifying your module setups that no accounts are posting directly to the inventory account except for the product line maintenance. And so just to give you an example, we have found when we've been helping people research in miscellaneous item maintenance, sometimes they will put the inventory account in there. That needs to be something different. All right, so this is what I was referring to in product line maintenance. You've got this inventory account right here. That is the only field where the inventory account should be designated. I also recently had somebody, their inventory adjustment account, they had that posting to the inventory account. That should be something different. So, you know, there are as many different inventory systems. There can be that many different reasons why things may not balance. I've given you some of the key things that we always start with. There are some utilities that Sage has that we can use to help with the balancing. So if you end up needing any assistance with that, please let us know. And getting close on time, so let's go through purchase order, the purchases clearing report. You run that in the period end menu. And for those of you who are not familiar with it, it is simply a report that shows you any discrepancies between your receipt of goods and your receipt of invoices on purchase orders. And if your processes are such that you do the receipt of goods and you enter that invoice number with it, then you should not have anything posting to the purchases clearing. However, we do have people who do it that way, but it still end up with something in the purchase clearing account. And most often that comes about because of returns. If somebody does a return of goods and they don't put in an invoice credit memo number, then it will open that purchase order back up so that the quantity received is 0, but there's a quantity invoiced. So if you have that situation, then we should probably talk to make sure we set up a good process for you. All right, so the purchase clearing account, it is defined in product line maintenance. So I'm going back a slide. So that's my purchase clearing here. And going back, typically there's only one account set up for that. You know, it's not a different one for each product line. And that this purchase clearing report we're talking about is perpetual. So when you run it, it is based on what is updated at this point in time. If you have version 2021, which is 7.0, Sage did add a purchases clearing from history. So if it's hard to get the timing just right, then you can make use of that. All right, so what do you do if it doesn't match the report to the general ledger? Same thing, run that daily transaction register, make sure with the detail report that no journal entries were made, and go through your module setups and make sure that nothing has been set to post to that purchase clearing account. It should only be used on that product line maintenance. And then make sure on the GL detail report that no postings came from another module. You know, I have seen where people have used that purchase clearing account on an AP invoice. And one more important note, there is an exception. There is a valid reason why your purchase clearing report will not balance to the general ledger. If you do a receipt of invoice and it's a partial receipt, so let's say you had 10 on order, but you've only gotten an invoice for 5 of them. So you put 5 invoiced and you change the cost, that will cause the purchase clearing to go out of balance. Once you get your next invoice and that purchase order gets completed, it catches itself up. So if you have that situation happen a lot, it can be quite the challenge to keep that balanced. All right. Alana, I'm going to stop sharing so you can spin the wheel. I talked a lot. Sorry for the delay.
No worries. Let's spin this wheel. Let me share my screen here. Okay, show see my screen. Spin, 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 spin. And let's see, our winner this time is Christina W. Let's see. And I'm always scrambling to see what the last name is here. So if Christina W could speak up in the comments here, and she is doing so now. She said, thank you. That's Christina Wood with, and let me scroll over here, Performance Cabling Technologies. Congratulations, Christina. I will get your gift card to you. Thanks everybody for joining. We're going to wrap this session now, and hopefully we will see you in the next one. Okay.